Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, who is the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, let's maybe start off with the trade of last week, which is a short on Anglo American, when everything looked really, really ugly. And subsequent to that, the picture has improved somewhat, but do you think maybe this is just the lull before the sell-off, or is that what you're hoping?
Well, look, yeah, I don't know. Look, hope is never a strategy when it comes to trading. You've got to trade what you see. You know, what I can hope for and what really happens are often two different things. But
True.
But if we look at this, I mean, I'll explain what I see. I had a bearish outlook on the stock last week, which is why we shorted it. I still do think this looks bearish, but we've got to keep a very careful eye on it in the week ahead, because obviously, as in everything with trading, you know, the market's dynamic and the picture can change. So let's just have a look at it, though. This is the chart of Anglo American that I've got up on the screen. Regular viewers will know that I've said for quite a while that the resource sector is looking, it certainly is the weakest sector of the market. This is probably one of the weakest shares in the resources sector. And my feeling was that on this break underneath what was support at 237 Rand, it's broken below those pivot supports over there. It gave a retest back up to the underside of 237 Rand, and it's staying underneath that level at the moment. So now that's resistance. So what we did for the portfolio was I went short on Anglo American at 231 Rand and 91 cents after it had reversed down off that resistance level. And my stop loss here is 242 Rand. Now, that did work out quite nicely.
In fact, almost instantly, wasn't it?
Yeah, it quickly moved lower. It got down to about 215 Rand, and now it seems to have bounced back, and today it's trading back around about the level where we shorted it again. So now this is a bit frustrating. It's gone from being quite a healthy, profitable trade now into a situation where we're more or less at break even on it. And the question I ask myself is now, well, do we hang on? Do we sit tight? Or do we just leave the strategy as it is and wait, and if that stop loss gets hit at 242, then we'll call it quits. And I'm inclined to just go with the latter, to stick to the original strategy here. What I do see, I think, is this share is still consolidating underneath that resistance, which does open the potential possibly for a break to the downside. But there are certain headwinds for this trade now, in the sense that the Rand is weakening, which helps the stock like Anglo American and so on. So, for the time being, I'm going to stick with the strategy here. But I guess it illustrates again that, trying to run your profits in this market has been tough, unless you've been in the right stocks that have really been trending nicely, which there have been a handful of those. But other than that, it's tough, and that choppiness that we've seen has been a bit tricky to trade lately.
Yeah, so if it got back to, say, 237 and it failed at that point, would that be potentially bearish, and we could see it go back down to the 215, 216 level? Yeah,
quite possibly. And it seems at the moment like it's in a range between about 215 and 235, there and thereabouts. So it's still stuck in that range for the time being. If it was to break up at the top of that range, then I think I'd have to take my bearish stance on this share and set it aside and say maybe I'm wrong. But on the other hand, if we were to go back down and take out that 215 Rand low, then it might open the way for another sell-off. At this stage, it's anybody's guess as to which way it will go.
Okay. It's funny, the resource sector has been one of the weakest this year so far, but our show is quite heavily weighted towards resources this week.
Yeah.
And I know that the next trade you want to talk about is the Platinum ETF.
Yeah.
What are you seeing there, guys?
Yeah, okay, well, remember that this Platinum ETF, it's called the New Gold Platinum ETF. It's a new product that only came to the market a couple of weeks ago. It's an exchange-traded fund which represents the Rand price of platinum. Each share, if you like, of this ETF represents 1/100th of an ounce of platinum. So what we've got here at the moment is I've got a chart of the dollar platinum price on the screen at the moment, just to illustrate what I saw at the time. This chart goes back about 18 months or so, and what you can see is that it's really been range bound. We've been the low of the range is about $1,420 an ounce, and the high is $1,730, and we've been bumping up and down between those range boundaries for the last 18 months or so. We got down to the lower end of that range recently, and we turned up and reversed up off that support level. So that for me was an interesting development. Also knowing it, there is a fair amount of labour uncertainty in the platinum sector at the moment. We're going into wage negotiation season. There's already been a little bit of labour unrest. There's still potentially more to come. We don't know yet at this stage, but that could ultimately hinder production potentially. There's also the risk of electricity problems in the winter months. Again, we're speculating there. We don't know for sure. But anyway, combining that with the technical outlook for platinum, I felt that there was a case to be made for looking to buy platinum, the physical metal itself.
Not the producers.
Yeah, the physical metal based on that. So this is the dollar price. Now, obviously, what we're looking at is the rand platinum price, which looks a little bit different. The chart of the rand platinum price is on the screen now. What I saw there was that there was a fair amount of support around this 13,000 rand an ounce area for rand platinum. And it was, I thought, rather fortuitous that this ETF came to the market when it did. It basically arrived on the market at the time when we were hitting that support level over there on the rand platinum price. So what I did for our portfolio was I bought 680 CFDs of this new gold platinum ETF. I paid 135 rand and 60 cents for them, with a stop loss at 128 rand 50. And it's at the moment it's working out reasonably well for us. It's trading just north of 140 rand at the moment. So it is working, largely driven really by the weakness in the rand more than strength in the platinum price. So, but nonetheless, it is working out for us for the time being.
So if that platinum price strengthens and the rand doesn't come back too much, then that should kick up quite nicely.
Yes, it would do. This is a combination. This exchange traded fund is the rand platinum price, so it's affected by both the dollar price of platinum and the rand dollar exchange rate.
Yeah. Well, that sort of takes us on to the currency, and I guess this is a trade that you wished you had done. You were away a couple of weeks ago, and you did have a notice up on your site about it. So tell us what you saw, and I suppose it has transpired today.
Yeah, it has. Well, it's worked out over the last sort of 2 weeks. So what we've got here is a chart of the rand dollar exchange rate. And there you can see the uptrend, or put it this way, it's a weakening trend for the rand, going back to March of last year. And you can see that each time the currency is pulled back to that trend line, it's moved up off it. So in other words, the rand has been weakening. That trend indicates that the rand is weakening. What I saw was that there's this area of support was down here at 8 rand and 90 cents. And that's when I was away, right? It was 2 weeks ago, and I did look at it, while I was on holiday, and I thought if I was here now, I'd be looking to put a short rand trade on. And anyway, it's worked out. What I see now is that there's been a very clear triangle pattern that's unfolded over the last couple of months. You can see it over there, and you've got 5 clear waves inside this triangle. You've got wave 1, 2, 3, 4, and then always on the 5th wave. That is usually the wave that breaks out, and that's what's happened in the case of this triangle. So it's followed the textbook definition pretty well. And what you typically do is you take the height of that triangle at its broadest point, and then you project that distance out from where the breakout happens to give you a measured target based on the triangle pattern. And in this case, it gives us a target of 9 rand and 85 cents for the currency. Now, we're already trading up at about 9 rand 50 today. So I'm not doing a trade here. I'm really just pointing it out because it is interesting in the context of the trades that we have on at the moment, and also in the context of what I'm going to talk about in a moment now. It looks to me like this does potentially set up a further weakening in the rand as things stage. But for me, I'm not going to chase it now because the risk to reward ratio just doesn't make enough sense for me to do a trade. I would have far rather done it at 8 rand 90 than to do it now at 9 rand 50. And because that risk to reward ratio is not favorable, I'm not going to do it. I'm really just pointing this out.
But guys, just looking at that longer term graph, if the rand does come back, which it has a tendency to do if you look at that, is it the fact that it's set itself another sort of fresh low or fresh high, depending on which way you look at it, indicates that maybe the potential for it to do this again in future is higher? I don't think I'm not asking this question very well, but it has been on a weakening trajectory, and I think that's been proved by the various blowouts, and then it comes back a bit, and maybe the potential is there for it to come back and maybe take advantage of another blowout.
Yeah, that certainly could be the case. If we were to see the currency pulling back to about 9 Rand here, then that's where that trend line would come in again, and that's where we'd potentially look to once again short the Rand. So, whilst that trend is in place, you've got to continue to give the benefit of the doubt to the fact that the Rand is weakening. Until that trend breaks, that'll be my default stance. If we start to see the currency breaking back underneath sort of 8 Rand 90, 8 Rand 80, that sort of area, then I would say, well, then maybe we've got a chance that the Rand is going to go stronger. But for the time being, the trend is your friend, and we need to see, I'm going to give that trend the benefit of the doubt whilst that trend is in place.
Okay. And then you talked about a couple of interesting slides that you've got, and they show that the top 10 and the worst 10 performers this year, and it's actually... Yeah, it's quite an interesting mix there.
It's quite interesting. So this is the top, the stocks that are in the top 40. I've basically pulled out the top 10 performers of the year and the bottom 10 performers in the top 40 index. And there you can see them ranked in order. So interestingly, the best performing top 40 stocks on our market this year have been Mondi PLC and Mondi Limited, which I think might surprise a lot of people. Discovery, SAB Miller, Naspers, Richemont, Aspen, British American Tobacco.
That one must really rankle, mustn't it?
Yes, because we were in Aspen and then we got stopped out. We got spat out of it earlier in the year. Very, very frustrating that. British American Tobacco, Old Mutual, and Remgro. Now, what do you find interesting about that is that virtually all of those stocks that are in the top 10 performers on the top 40 are non-resource Rand hedge stocks, which I find very interesting. And that's really been the place to be this year. And it's easy in hindsight. The Rand has been weakening, and the resource shares have been a horrible place to be because commodity prices have been under pressure, etc., etc. But the companies that derive a lot of their earnings from offshore and are not resource-based have really done very well. And if you look at that list on the left-hand side, you can see most of those stocks, in fact, virtually all of them, are non-resource Rand hedge stocks. And then if you look to the list on the right, that's the list of dogs, if you like.
Horror show.
The ones that have really underperformed horribly this year. And you can see Goldfields, Impala Platinum, Anglo Gold, Amplats. There's a whole host of resource shares there that have been amongst the worst performers for the year to date. And interestingly, one or two retailers in there as well.
And I suppose ShopRite, you pick up, it was one of last year's best performers, and that's turned Truworths and Steinhoff. And I suppose the frustration about Steinhoff is that it is actually a Rand hedge, but why is it sort of being brought down along with the retailers and the banks? And yesterday we were just wondering about this and saying it could be the exposure to JD Group and just the perception you're just lumping Steinhoff and JD and Lewis into the same category.
Well, that, and also they've got a lot of exposure in Europe. And remember that Europe is the weakest economic zone in the world at the moment. They're barely even managing to stage any economic growth at the moment in Europe. So there's that, and there's also a fair amount of debt in the business. So that, I guess, is what's also holding Steinhoff back.
I suppose the one share that you don't have there is Able.
Yeah, well, Able's not a top 40 stock anymore. I think it fell out of the index some time back. But I mean, if it was in the top 40, no doubt it would be right at the top of the list.
Yes, we laugh. So hopefully we went short, which obviously we didn't for the show. Guys, so what is the portfolio looking like then at the moment?
It's looking like this. We're sitting with 267,118 Rand in the portfolio. So it's up 6.8% for the year to date. You can see the two trades that we still have open over here, our short in Anglo American and our long trade rather in the New Gold Platinum ETF. And we've still got this put option structure which expires in a month's time, and we've done a few Aussie 40 trades against that over the last few weeks where we've made some profits. But we're up 6.8% for the year to date. I think the market's up about 5% so I guess we're slightly ahead of the curve, but certainly not shooting the lights out by any stretch of the imagination.
Okay. And then just to end off with Garth, you do have a CFD course coming up. Just remind us about the date.
Yes, the 6th of June is when I'm running a course in Johannesburg on understanding CFDs as a trading product. I've had a lot of requests from people to run a course explaining how CFDs work, what they are, how you can use them as a tool for short-term trading. So I've developed a course to cater to that demand. Anyone that's interested in attending it can email me, garth@traderscorner.co.za, and I'll send you the details on how to book and so on.
Great. Garth, we have to leave it there. Thanks as always for joining us.
Thanks.
That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.